Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Best of the season, Chris.
Hey, thanks you. Thanks, Jim. Best of the season to you as well.
Chris, how would you sum up 2018 when it comes to being a technical trader, not just by name, but by nature?
Yeah, 2018, it happened to unfold a lot like I anticipated. I figured the way the year had ended, the 2017 had ended on a very strong note, massive rally. Trump got into play in 16. We've just seen this never-ending rally all the way up right into 2018. All the signs were there that, we're overdone. It was going to be some type of big correction and some choppiness in the market, and that's pretty much what we had. It's been an extremely volatile, tough year for investors simply because price has been oscillating up and down like a yo-yo. Didn't really go any higher. It's just been going up and down, and the only people who can really can make some decent money from the type of volatility and how quick these moves have been going are, day traders, momentum traders, and some swing traders, because these moves are just very quick. And the year is one of those years I thought it was going to be somewhat of a dud year, just high volatility, and that's where we're at. You look at the price action on the monthly chart and you zoom back, multiple years and different bear market tops. It looks just like a a bull market top. It looks and feels like we are close, like 3-4 months away from potential, the next bear market. So it's going to be, 2019 is going to be a really interesting year I think it'll be a trending year, and it'll probably be trending to the downside.
When you have a downside like that, are there still big opportunities?
There's huge opportunities in a bear market. 2007, 2008, were actually the best years of my life for trading. It was, it kind of bucks the trend of what investors and a lot of traders think. Like, really the best thing to do is just move to cash, and you need to take advantage of the downside, whether you're short selling stocks or you're buying inverse ETFs. Those are really kind of the main plays, and it doesn't matter if you sit in cash and just let the next year and a half pass on by, let the markets collapse, just sit there with your money. That is one very solid strategy. The other strategy is to liquidate everything and focus on having a couple positions. You don't need to put your entire portfolio, but you can put some positions into profiting from a falling market. So you buy an inverse ETF, and the nice thing about a falling market is the market typically falls 5 to 7 times faster than it rises. So, we've seen this massive, 8-9 year rally. Well, you could erase almost all of that in 1 or 2 years of selling. So you could make just as much money in the next year and a half as you would have in the last 8 years. So that's what I love about a bear market, is they collapse, they fall fast. You just have to make sure you're not holding a bunch of assets and stocks, because they're going to fall in value, and you just sit in cash and wait to rebuy when prices are cheap. Dividends are screaming, back. You can buy funds after a bear market that are paying 6, 7, 10, 12, % dividend, and you're sitting pretty with, appreciation of the shares. So there's a lot of opportunity in a bear market, and, it's not easy on the economy. It's not easy for most people. It's a kind of a really bad time in general. But I mean, you can make a lot of money if you go at it with the right mindset and take action.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what do you think is going to happen with energy stocks in the new year?
Energy stocks, they've got a pretty nasty looking chart. When you look out long term, going back to even 2007, the long term outlook for energy stocks actually looks pretty bleak. Prices right now have sold off fairly well. They are at support, but when you look at the big picture, the whole energy sector for stocks is like the XLE. To me, right now, it's trading at $63 a share. It really looks like it has potential to go all the way back down to about $40 a share. So we're looking at a pretty big cut just in terms of the multi-year pattern and price formation that has formed there. And, it kind of makes sense. Looking at, the stock market, if we go into a bear market, the odds are it's going to fall about 50%. So, it doesn't matter what sector you look at. I would expect, 30 to 50% haircut in almost everything. And obviously the stronger of the sectors might be 30% reduction. The really bad sectors could be, 60, 70, 80% reduction in value. And, we've seen that with precious metals. A lot of those companies and stocks have fallen like 80%. If you're in the wrong sector, it's not good. But if you're short or can profit from those, you can make a lot of money. So it's the energy sector. I'm not very bullish on a whole lot of stuff in general looking forward a year from now.
We'll have more with Chris Vermeulen right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, do you think precious metals will be the story of 2019?
I think they will be. I think they could kickstart the year with a really good tone. I think what we usually see right near the end of a bull market is we see commodities start to perform well, and we usually see precious metals perform really well for 1 to 2 months. And I think we're in those last, 1 to 4 months of the bull market, which means we should see the precious metals and the miners perform really well. So we might start to see them break out and rally. And I think there could be a lot of media coverage and everyone talking about, precious metals. They're back in favor. They're the safe haven play with the bear market potentially coming. So I think it's going to be really bullish for miners going forward here for a couple months. But really, I think that is about it, because once a bear market starts, just go back and look at gold, silver, and miners. They collapse just like everything else. That being said, when the bear market comes to an end, you really want to move into those precious metals quickly, because that is where the average mindset for investors is still at. They're like, I'm done with stocks. Just put me into bonds and gold. So, after a bear market, you want to be getting back into those precious metals because you can have these massive rallies.
Chris, looking back over the year, were there any surprises for you?
I think one that kind of caught me off guard was the big drop in bonds. Looking at the price of the charts, I thought they'd hold up a little bit better. Rates continue to climb and climb more than I anticipated, and so the high interest rates, or I wouldn't say they're high, the higher or the constant increase of interest rates and the decline in bonds was kind of the big one that kind of caught me off guard, and also the U.S. dollar. U.S. dollar has been performing really well, and I think there's been a lot of things in the news globally that have had a lot of people want to move to the U.S. dollar in 2018 as a safe haven play. We've seen a lot of other currencies' values just plummet, and the U.S. dollar has rocketed higher. So, I think the global concerns has created a lot of people to move into the dollar. And then it also gets investors thinking, well, if I'm into the dollar, I might as well get into U.S. equities because then I can profit from a rising stock price. Plus the currency is increasing. I can make a lot more money if I go there. So it's kind of the whole strong dollar, I think, played a big role on the U.S. equities market. So that was my biggest thing, was seeing the dollar really take off as much as it did, and for bonds to pull back as far as they have.
What do you think is going to be the biggest factor on the markets in the new year?
I'm not sure what the biggest factor is. I have a feeling we're going to see the technology sector break down kind of first. They've kind of been the big leaders in the market, and they've been on such a strong tear to the upside, and everybody seems to be piled into them and just continues to buy the big tech companies after every dip or during every dip. And I think the big play here is going to just be so many average investors starting to see the big tech stocks kind of crumble, and I think it's going to be a big shocker. And I think it's just going to be a big mentality mindset shift. Overall, people are going to be, right now, people are still feeling that the equities market is the place to be. I feel as though it's the place you don't really want to invest in right now. I think if you have anything, you just sit tight. We are still in a bull market. Let your money do its thing. But I think next year, people's brains might finally catch on that, okay, we're starting a bear market and we could see prices collapse very quickly. And I think it could collapse a lot quicker than most are anticipating, because 2009, 2008 was such a painful year for so many people that I know it was a long time ago and time heals most wounds, but people, I think, got so hurt by 2008, more so than ever for some reason, that they're going to be itching to sell a lot quicker this time. They're going to say, screw the broker. I'm not going to hold on to him saying, just leave it. It's a good long-term investment. I'm going to get out. And I think people are going to go against their advisors this time and say, I'm not holding on like you told me to last time. Look what happened. So I think it could be a really bad bear market, very swift, quicker than, if you're not quick enough, you won't even be able to catch it type of play. So it's going to be interesting.
Is one of the factors a lot of baby boomers are either retired or about to retire, and they want to hold on to what they've made?
For sure. I think I think that's a very valid point. I think that is going to be is definitely in the front of the minds for most baby boomers. Is, in 2008, they weren't that far from retiring, or even if they were retired, they suffered a huge blow to their savings, and finally they've got it back and then some. And I think they're going to be extra defensive. And that falls into what I just said before, is this time, when they get that gut feeling and they have a couple big down months, they're going to just call their advisor or their broker and just say, sell everything. I'm just sitting here fat and pretty with my retirement nest egg. I'll sit here in cash and I'll make my 1%. I'm perfectly happy making 1% versus losing 50.
Chris, all the best of the season for you and your family.
Hey, thank you, Jim. You too. Have a great season.
And we'll talk to you next year.
All right. Take care. Thank you.
Our guest has been Chris Vermeulen from the technicaltraders.com. You're listening to HowStreet.com radio. You'll find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests, like Chris, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.